Have you ever found yourself spending, just endless hours sifting through market data, loading up charts, constantly second guessing your trading setups? Or maybe you're just curious about the markets, but those expensive subscription tools and just the sheer volume of information feel like this huge barrier. Welcome to the Deep Dive. We're here to cut through all that noise and get you well informed quickly and thoroughly. Today, we're doing a custom-tailored deep dive into what feels like a really revolutionary approach to market analysis. We're going to unpack a zero-cost, flexible Python stock market scanner. Now, this is a system designed to give you a daily, automated, data-driven edge in the markets. Imagine trading smarter, saving time, staying ahead, and all without those ongoing subscription fees. What if the tools you needed, the ones for analyzing the stock market, weren't locked behind some paywall? What if there was something you could actually build, customize, and truly own? That's the core idea we're digging into today. So let's kick things off. What's the main frustration, the big problem this kind of scanner aims to solve for you? I know for a lot of traders, it feels like finding a potential trade is almost a full-time job in itself.
Well, it absolutely can be. And what's fascinating here is that while, many commercial stock screeners can cost you anywhere from $30 to maybe $100 a month, and they often rigidly limit how customizable your searches can really be, the underlying market data, things like historical prices, trading volume, a lot of that is largely public, or it's freely accessible through various APIs. This reality just opens up a really compelling and, frankly, a pretty liberating alternative.
That is truly compelling, realizing that core data is just out there, freely available. It changes the whole paradigm, doesn't it?
It really does.
But if that's the case, why go through the effort of building your own system? What are the biggest advantages someone gets when they decide to, take control and build their own, beyond just saving that monthly fee?
That's where the real power lies. Beyond the obvious cost savings, you gain complete control. You define exactly what you want to look for. This means you can create these highly specific combinations of indicators and criteria that, commercial screeners often just can't support easily, if they even support them at all. And it's more than just a tool, and it becomes this profound learning opportunity. You really deepen your understanding of Python programming, how market data actually flows, the mechanics behind all those technical indicators you see on charts.
Right. So building it actually forces a level of precision and discipline maybe in your strategy development. Something that's almost impossible to get when you're just clicking buttons on some platform.
Exactly.
It really transforms you from just a consumer of signals into like an active architect of your own edge. That promise of freedom and control, it's powerful. But for many, the natural next question is, okay, how does this magic happen? How does this automated assistant actually deliver those trade-ready insights?
Precisely. Let's pull back the curtain a bit and reveal the practical workflow, the blueprint, really, of how this market scanner comes together, how it connects data, indicators, filters, and ultimately gives you those actionable alerts. So the process starts with step one, pre-scanning with Finviz.com. Before we dive into the heavy data crunching, Finviz is used for a quick initial screen. It helps cut down literally thousands of stocks to a much more manageable list. Recommended filters include things like looking for companies with a large market capitalization, making sure they're USA traded, focusing only on individual stocks, no ETFs, and requiring an average daily trading volume over, say, 100,000 shares, a price over $10, and a short float under 20%.
Hold on, short float, that's a term maybe some of our listeners aren't too familiar with. What exactly does that mean here?
Good question. So short float basically refers to the percentage of a company's available shares that have been sold short by investors. People betting the stock price will go down. A short float under 20% generally suggests there's less bearish sentiment on the stock, which could be seen as a mildly bullish sign. We also look for an average true range, or ATR, over 1. That measures how much a stock's price typically moves in a day, so it helps you filter for actively trading stocks. And finally, making sure it's trading above its 200-day simple moving average. That usually indicates an overall upward trend.
Okay, got it. So Finviz handles the first big cut.
Exactly. Once that initial list is refined, we move to step 2, downloading historical data with Polygon.io. The system then automatically downloads up to 2 years of historical price data. That's your open, high, low, close, and volume using Polygon.io's free API. That data is saved really efficiently as feather files. These are incredibly fast and compact.
Feather files, like super optimized snapshots.
Yeah, think of it that way. It means your daily scans load and process information almost instantly. Saves you valuable time every morning. And the system is also built for flexibility. It can easily integrate other providers too, like Alpha Vantage or Alpaca, maybe for backups or if you need different kinds of data.
Makes sense. Always good to have options.
Definitely. Next up is step 3, calculating technical indicators. Once that raw price data is collected, Python libraries like Pandasta or Tellib are used. These calculate various technical indicators directly on your own machine. This avoids making extra API calls just for indicator data.
Ah, clever. Keeps things efficient.
Right. Key examples include the Relative Strength Index, RSI, which tells you if a stock might be overbought, say above 70, or oversold, below 30. And the Moving Average Convergence Divergence, MACD. That helps spot momentum shifts and trend changes by comparing short-term and long-term moving averages. But beyond those, the scanner can calculate a really comprehensive suite, around 25 different indicators in total, so you can analyze trends, volatility, momentum from pretty much every angle.
Wow, 25 indicators. That's a serious toolkit.
It gives you a lot to work with. For instance, you could use Bollinger Bands to spot potential price breakouts, or maybe the average directional index, the ADX, to confirm how strong a trend is, or even Donchian channels for volatility and trend continuation.
Okay, so that's a powerful collection of analytical tools. Once all that data is crunched and the indicators are calculated, how do you actually use it? How do you find those trade-ready insights you mentioned?
Right, that leads us perfectly into step 4, applying custom filters and strategies. This is where you really define your personalized trading rules. The scanner applies filtering logic to find only those stocks that meet your very specific criteria. For example, a buy signal might combine, let's say, an RSI crossing above 30, and the MACD line crossing above its signal line, and the stock trading above its 200-day moving average.
So multiple conditions have to line up.
Exactly. The system comes with several modular example strategies just to demonstrate how adaptable it is. Things like classic momentum plays like RSI plus MACD, or volatility strategies using Bollinger Bands, or even trend confirmations with ADX plus RSI. But the whole framework is designed so you can fully customize it to your unique approach. It's your strategy being implemented.
I like that. Very personalized.
Then finally, in step 5, displaying results and visualizations. After all that filtering, the scanner presents its findings clearly. You'll see the scan date, clear descriptions of the exact filters that were applied, the number of stocks that actually passed your rules, and of course their tickers. It also generates these helpful sector distribution plots. They show you, for example, how many overbought or oversold stocks fall into different sectors. Helps you quickly spot maybe hot or cold industries.
Oh, that's useful context.
Yeah, and for the really strong candidates, it plots detailed financial charts. These show the price action, volume, your key indicators like RSI and MACD, and other technical overlays, usually over the past 3 months or so. And this use of static visuals, it's intentional. It helps you confirm the setups without that psychological pressure you get from watching real-time price swings constantly. You can analyze calmly.
That whole process sounds incredibly efficient, like having a real automated assistant just for traders. But, when you're building your own tool, how do you make sure it's always working for you without needing manual effort every single day? And crucially, how do you ensure its signals are actually reliable in the very dynamic world of the markets?
Yeah, this raises some really critical points. One of the biggest advantages is, of course, the automation. You can schedule these scripts to run daily using tools that are commonly found right on your operating system, like Task Scheduler on Windows or cron jobs on Linux or Mac OS. This ensures you get those fresh insights automatically without you having to lift a finger, basically.
Set it and forget it, almost.
Pretty much, for the daily run at least. You can also integrate instant alerts through services like nti.sh or maybe Telegram bots or Slack webhooks, so you get notified right away when a signal that matches your criteria appears. The scanner can also automatically manage and prune your watch lists, keeping them current over time.
Okay, automation sounds great, but what are the catches? What challenges pop up when you build it yourself?
Right, building your own scanner does mean navigating some common challenges, and it's important to be prepared for them. For instance, you will encounter API rate limits. Think of these like a speed limit on how much data you can request at once. Polygon.io's free tier, for example, is about 5 requests per minute.
Only 5. Okay, that could be limiting.
It can be, yeah. So you need smart ways to manage this, maybe gathering data in larger batches or saving it locally once you have a caching it so you don't have to ask for it again. Or even setting up a backup data provider, maybe Alpha Vantage so your scanner never misses a beat if one API is temporarily down or you hit a limit.
A failover system, basically.
Exactly. You also need to maintain a clean Python environment Keep your libraries updated and just be mindful of data reliability. Sometimes data feeds can have glitches, and inconsistencies could potentially lead to bad signals if you're not careful.
Those are definitely practical considerations. And what about the human element? Because, as you said, the scanner isn't replacing you, the trader, is it?
No, absolutely not.
It's providing a short list, right? Not a definitive buy this now command.
Precisely. That's a critical point. One major aspect to watch out for is avoiding overfitting.
Overfitting, meaning tuning it too perfectly to past data.
Exactly. Tuning your scanner so tightly to what has happened that it fails miserably when market conditions inevitably change. A key best practice here is just keep your strategies relatively simple and robust. Don't try to curve fit every little wiggle in the past data. And crucially, before risking any real money, you should absolutely backtest your strategies. Use historical data and frameworks like Backtrader or Zipline to see how it would have performed.
Validate before you activate.
Absolutely. Remember, a signal from the scanner is just a well-researched shortlist for your human review. It is not a guarantee of success. You should always incorporate basic risk management, like using fixed position sizing. Don't bet the farm on one signal. And, maybe most importantly, always perform a manual review of the charts. Maybe check the company's recent news or fundamentals before acting on any signal.
That layered approach makes sense. Confirm the setup visually, look for context.
Right. It helps you confirm things and allows you to maybe uncover subtle patterns or news that purely automated indicators are just going to miss.
And you mentioned this modular design earlier. It sounds like this isn't just stuck being a swing trading tool using daily data, right?
Not at all. That's the beauty of it. It's really a flexible foundation. You can extend it for intraday scans if you get access to faster, maybe paid data providers. You could integrate things like news sentiment analysis. You could even build interactive dashboards on top of it. It really scales beautifully with your ambition and how your strategy evolves over time.
So the choice seems pretty clear then. You can keep paying those monthly fees for generic screeners that maybe don't quite fit your needs. Or you can embrace the power of owning a tool that's entirely yours. Yours to run, modify, and hopefully trust for the long haul. It sounds like a pretty clear choice when you put it like that.
The real strength, I think, is exactly that. The modularity and the adaptability. It transforms your trading process. It turns it into this flexible laboratory, a place where you can experiment, learn, and evolve your strategies in a really structured, scalable way. This isn't just about writing some code. It's about building a complete personalized workflow that genuinely empowers you.
That's a powerful concept, the trading laboratory.
Yeah. And this deep dive has shown how leveraging technology for smart automation can give you that daily data-driven edge in the markets. It frees you up from those repetitive tasks, from information overload. So here's a thought to leave you with. How else might applying this kind of systems thinking and smart automation, the philosophy the scanner's creator really champions? How else might that allow you to reclaim time and focus on analysis and execution in other areas of your life, maybe even beyond just trading?